Okay, it's Saturday, November 15th, 2025. I had recorded a version of this yesterday and discovered after the fact that the audio did not record. Apparently, did not have my headset plugged into my computer. I don't know how I didn't notice that. So I was wearing my headset and speaking, but it wasn't connected. Okay. Anyway, so yesterday was the first anniversary of the Roulette Epiphany, which essentially is the realization that if you trust your edge and your method, and if you trade only the setups it gives you, if you follow the rules, if you are patient, and if you think in terms of weeks and months, never today or even tomorrow, then you will make a lot of money and you will live a life very few can afford. And a thought just came to mind. I know a lot of you are using prop evaluations in order to become funded traders and hopefully earn payouts and eventually earn a live trading account. And the end goal should not be to be a forever prop trader. The end goal should be to accumulate enough capital that you can fund your own trading account with, I would say, at least $50,000 to $100,000, the US equivalent. And one problem I know even I have had in the past, and I can't be the only one. I know I'm not the only one, because I know at least one other trader mentioned this to me, and another one on YouTube a while back had mentioned this. And that is these evaluations where it's 2 days to pass or 5 days to pass or 7 days to pass, that minimum time to pass often becomes part of the goal. And it shouldn't, because it fosters the erroneous opinion that you want to get to that 50 to 100K self-funded account as fast as you can. So you have to pass the evaluation in the minimum time. You have to earn a payout in the minimum number of days. So, for example, Top Step and others, you need 5 profitable days of at least 200 a day before you can request a payout. And once you get a payout, you need to do another 5 days. I think, there's others I think that require 7 days. Get time out of your mind. Just be patient and think in terms of weeks and months. Not today, not tomorrow, not passing 2 days, passing 5 days, passing 7 days, passing 10 days. Just take your time and you will make a lot of money. And you'll live a life very few can afford. Moving on, I made this slide. So this is the a picture of the paperback cover of the book Flash Crash, the story of Devinder Sarel. Devinder Sarel is the British trader who was blamed for the 2010 flash crash. Newsflash, it wasn't him. It's BS, I'm sure. But at any rate, he started out as a prop trader. And if you read the story, it's interesting. It sounds like it was weeks and months of training and sim trading before they were allowed access to capital and the live market. He primarily traded the S&P 500 E-mini. That's why I put this down here, and reportedly earned somewhere on the order of $40 million US in profits over what amounted to maybe a 10 or 12-year trading career. I think he may have started in 2003, and then he was arrested and falsely charged with causing the flash crash, I think in 2015 or 16. So anyhow, his story was always sort of an inspiration to me since I first read it, which was probably 2022, about the same time that I signed up at Forex Factory. I had found Rocky Point's thread, and I really got interested in what he was showing. And so this book and Rocky and Forex Factory have sort of been a part of this very important part of my trading journey. And to reiterate, slow is fast, fast is slow. I adopted this from a YouTube channel. The channel's name is Dave Scott Trades. He posts videos primarily talking about controlling your emotions, developing discipline, sticking to your trading plan and your trading rules. And when he says slow is fast and fast is slow, what he means is simply you have to be patient. If you try to pass your evaluation in 2 days, or you are racing for a payout, you're probably going to over-risk and over-trade. And I think over-trade is a great catch-all term because it includes over-leveraging, trading too many contracts for your available capital or your available drawdown allowance. It includes FOMO. It includes winging it, just buying, selling, reversing, because that's what the market's doing that second. And as your overtrading increases, your risk of ruin increases to the point where it almost becomes a certainty. It's inevitable. And so this little equation over here, again, I didn't come up with this either. I didn't come up with anything you're seeing here, right? The affirmation on the previous slide was basically a quote from Gonzalo Garcia Pelayo. The inspiration, the spark for the Roulette Epiphany, I simply revised the words a little bit so that it would more accurately describe my activity as a day trader. This little equation comes from Mark Douglas. Now, I don't know if he ever put it anywhere as an equation like this. This is just how it sort of landed in my mind and how I conceive of it. And that is that if you have a consistently profitable trading plan and you add to it the developed ability to follow it, then that's going to equal an income you can rely on. And if you read Mark Douglas's books, whether his first one, The Disciplined Trader, or his second book, The Trading in the Zone, which is probably the one I would recommend. I think it might be a little more accessible. Or his great seminar that he gave that you can find on YouTube still. This comes right from him. So I created this slide for me. Again, everything here is for me. This is part of my workstation. This, and then this, and then finally this, which is Rocky Point's last post at Forex Factory. He had gone on vacation, traveled to Europe with his wife from Mexico, came back first week of March, And this was his last post. He was definitely planning on coming back. Something happened to him that day, that night, the next morning, and we lost him. We lost him. And boy, I've said it before, not a day goes by that I don't think of him. I include his thread as basically of equal importance to the Roulette Epiphany, because if it weren't for his thread, I would not have signed up for Forex Factory. I would not have started consuming trading content on the web as I did, and I would probably never have been served up by YouTube that little 15-minute biographical video about Gonzalo Garcia Pelayo. And Rocky was just a genuinely good person. He really was. And I miss him every day. Forex Factory is not the same for me, knowing that he'll never be back. And then my workstation actually would continue to my trading charts, which now are the ES. As of yesterday, as I've been planning, haven't mentioned it, my own plan, the ES has always been my goal instrument. It has been both the carrot on the stick before me that has kept me in the trading game, pursuing consistent profitability. It's also been the stick that's clubbed me upside the head numerous times, beat me up, and but I'm finally at the point where I feel that my discipline is such that I can trade it effectively. So, started yesterday, profitable day, newly funded, self-funded account, and that's what I'm going to be doing. And so I am going to be stepping away from Forex Factory for a little while. I'll still check in. I'll respond if I really feel a post requires a response. If I don't respond, either the post doesn't require a response, or I think you need to think about it yourself. How's that? I can't do it all for everyone. I believe I've put enough into that Price Bob thread and the YouTube channel that between what I have at Forex Factory, and all my videos are linked through the Price Bob thread. So you don't have to come to YouTube directly to watch this content. It's all accessible through Forex Factory. I am not a commercial. I'm not an influencer. I have no goals of any sort other than to be a regular guy participating at Forex Factory, trying to make a go of this trading game the same as all of you are. I don't have a trading course. I don't have any plans for a trading course. I have a Discord server. I think there's 5, 6, 7 of us, just some friends. No one pays to be there. No one's required to be there. And frankly, we don't show up every day. But, it's a way for us to keep in touch. That's all. But I'm not going to show you the ES charts in this video. Those are mine. I got my trading plan, and that's the market I'm going to attempt to work over the coming months, coming year. But I am going to share what I believe to be the 2 best fixed bar trading plans for a new trader, new to the Price Bob thread, who wishes to conduct 20-day, 20 trade sample sizes in order to develop the ability of consistently following a rule-based trading plan. Now the first, and this is not in any particular order, it's alphabetical. I'm going to talk about gold first. That doesn't mean that I believe that the gold plan is better than the YM. Either one of these, I believe, should be given strong consideration, serious consideration as a candidate for someone new to the Price Bob thread who understands that the purpose of trading a fixed bar trading plan is not profitability. It's ability. It's developing the skills you need to develop to break the cycle of over trading, over leveraging, FOMO, winging it, not sticking to your rules, blowing evaluations, blowing live money accounts, blowing sim accounts. That's what this is about. So let's look to gold. First, just a reminder, the elements of a fixed bar trading plan are selecting your instrument, selecting the precise fixed bar interval that you will use as your reference bar, define your risk relative to the fixed bar interval reference bar, define your take profit relative to the fixed bar interval reference bar. A proper fixed bar trading plan leaves no room to exercise discretion. So the first of the two plans would be trading gold, 30-minute fixed bar. The highlighted bar is the bar that opens at 7:30 a.m., closes at 8 a.m. When that bar closes, I put a buy stop above the high. I put a to go long, sell stop below the low to go short. In this case, you can see the high was 21.8. The long buy stop did not trigger. The sell stop to go short did trigger, and I would take my profit at that 61.8 to 1 profit level. That is a 61.8% extension of the range of my fixed bar reference bar. And my stop loss would be one tick above the high of the fixed bar reference bar. If this risk is too much for you to trade a full-size gold contract, then you must trade a micro gold, which is 1/10 the size. So rather than risking about $1,300, your risk would be $130. Instead of your take profit being approximately $800, it'd be approximately $80. You have to trade to the amount of capital that you have available and the size of your drawdown allowance. Remember, slow is fast. These profits will accumulate as your skills get stronger and you continue to be able to stick to the rules. So that's on gold. Second one would be the YM. Again, same elements. Select the instrument, in this case the YM. Select the fixed bar interval. In this case, the highlighted interval is the bar that opens at 9 a.m. Eastern Time and closes at 9:30 a.m. Eastern. That corresponds to the open of the New York Stock Exchange. So on this day, which was yesterday, would have put a long order at 47,280 and a sell stop to go short at, what is that? 47,183. Take profit at the 61.8. I will say for the YM, it's the one instrument where I will actually typically hold for a 1-to-1. Unless the 1-to-1 is more than 100 ticks, I'll then just take profit at 100 ticks. And that's it. That's how they work. Pick one of those. Do a back test. Go back a month or two. just practicing figuring out where your orders would go, which ones were filled, which weren't, which were profitable. I would also suggest that you track how, when a trade does trigger, I would put a spreadsheet. If it, how close did it get to your profit target, or how far did it go past? How often does a trade trigger and then, without going very far, reverses, hits your stop loss, but hits the target in the other direction? Those are important. You should keep track of those. So that's pretty well it. I would look at those two fixed bar trading plans if you're stuck on what you should do. But you got to start there. And again, if you're insisting on doing this in a prop evaluation account or your own live money account, make sure your position size is appropriate for your risk, for your equity or your drawdown allowance. If you have a max $2,000 drawdown allowance, you probably shouldn't be risking $1,300 on a trade. Trade micros. Trade 2 micros. And then as your equity increases, you can increase your size. But do keep in mind that most of these prop accounts have a trailing drawdown. So the first $2,000 you make, that doesn't mean you now have $4,000 of drawdown. You only still have $2,000. That doesn't start to increase at most of these prop firms until you exceed the amount of the account's initial drawdown. So that's it. Again, I'm going to be pulling back, not disappearing, but pulling back from Forex Factory for a while. Going to be focusing my efforts on trading the ES. Hopefully you won't see an article about VidVad crashing the market and a book about me. I'm not going to be, I don't spoof or do anything like that. It's very much fixed bar related, and reversal bars. If you saw my the video where I distinguish between fixed bar trading and reversal bar trading. I'm not doing anything exotic. Just going to make my attempt to finally make a go at the ES. And that's it. So thanks for listening. Good luck. And, again, keep your comments. I'm not going to be responding to private messages very much at Forex Factory. If you want any chance at all of having me respond, put your questions in the Price Bob thread. Okay? That's it. Take care. Have a great day.